Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, April 29th, 2019. What I want to do in this video, we'll keep it relatively brief, just touch on some of the things I'm watching, and as far as the bigger picture, not really so much individual trade ideas, although a lot of these could be actionable trade ideas, but I want to do kind of kill two birds in one stone, highlight what I'm watching on the broad markets and certain sectors of commodities. Again, I want to reiterate the theme that I've talked about recently, or at least caution not to fall asleep at the wheel. I know this has been just a grind higher, a steady, low volatility grind higher, and again, that's not conducive to swing trading. So the official trade ideas remain almost non-existent. Throwing out a lot of unofficial trade ideas, and again, that's reflective of a lot of things out there. Again, my confidence, everything else, but again, I wouldn't fall asleep at the wheel at this point because from periods of these low contracting volatility, especially when you reach extremes in the market, extreme overbought conditions, extreme sentiment, things like that, that's usually where the big moves come from. So you can see down here just how oversold we are on QQQ. And yeah, the last time we got very oversold, it didn't do much. It manifested into a correction there. But this time around, things are a lot different. The market is again pushing levels that we haven't seen in years, and really we haven't been this overbought since, if I said oversold earlier, I meant to say overbought. We haven't been this overbought going back to the top right here, back before in early 2018. So just keep in mind, I view it as a potential powder keg, and all we need is the spark right now to ignite it. Maybe it doesn't happen. Maybe the powder keg is on the bottom of this wedge here, and the market's going to explode to the upside. It's not what I see happening. And I'll tell you this, at this point in time, just kind of again looking at the charts, the risk reward is getting very compelling, even if we don't have a sell signal yet. And that's the same, the common theme here. Here's the uptrend line off the lows on the 24th of December, and we've yet to break that. And again, it's a daily chart, so we haven't seen a daily close below. We've had a couple brief pops below. I don't want to spend a lot of time talking about what I've talked about quite a bit, but there it is. You can see QQQ broke out to new highs with almost virtually no follow through. It hasn't given us a sell signal yet, but that's what I'm watching. Today was a flat day. I'm doing the market. You can see the Qs were up 0.19%, virtually flat. SPY was up 0.13, so a sleeper day in the market, and that's to be expected. Why? Because we have two of the 5 FANG stocks reporting today. I'm sorry, this week. We had Alphabet has just reported, so they're down. I mean, they're down pretty sharply, about 5% in after hours, but it's not doing a whole lot to QQQ. So that's not the reason I'm doing this video, and I'll get to the NQ futures. The reason I want to do this video is, again, to point out these levels because we may, and it's just a possibility, we may see things move very fast if the trend reverses, because that's been really what's been going on since the end of last year. Is the market, just like crude oil in the stock market, it's picking these trends, and they're one-sided trends. And the one thing that they both have done, both on the correction back in the end of last year as well as this rally, is they've exceeded just about all expectations as to how far the market could drop back then and how far it could go up. So this is where the big money's made, and we certainly, at least I certainly, didn't catch every bit of this rally here. But that doesn't mean I'm going to be falling asleep at the wheel and missing out on another opportunity. And if I thought it was to the upside, I would be talking about that now, and in a few weeks I could very well be talking about a move. Let's just say, for example, we get a pullback here, a correction, and we consolidate and hold some key levels, and I see some things firming up the outlook for the market. For example, the small caps, which I've talked about, have been lagging, and they're still very much off their highs, and this is the king of the risk on sectors. So they're still down over 8% off their highs, but they have the potential here to break out and start to play a game of catch up. So there's a lot of things I'll be looking for in the coming days to weeks to see whether I should sort of move away from that expectation, which is still my preferred scenario, that we're going to see not only a I don't think, as I said, I don't think we're going to see a test of those lows. I think probably right now the most bearish bears out there are calling for a test of the lows. Weeks back I labeled these color coded these three lines here, yellow, orange, and red. They're color coded appropriate. Yellow is caution. That's still, again, and this was my minimum target and still is on SPY, and that would be a drop right now of I can't grab it exactly, but it's roughly 8% drop from current levels. I still think there's a good chance we get there, and it would happen pretty quick, I think, if it does. Now, anything less, again, might help firm up the case, some consolidation here, work off the overbought conditions, things like that, get rid of the divergences, whether they're there or not. Let's just see what happens with price, because that's most important, and that could set the stage for a sustained and powerful breakout to new highs. Right now, as I said, we're just, in my opinion, too overbought, too extended, negative divergences, a lot of other red flags along the way here that say any breakout in the near term I would put very high odds on it failing. So again, it's about risk reward. And I've been saying it for a while, and we've gone up, but we've only gone up a few percentage points in the past couple months here. So it's not like it's a runaway market. It might feel that way because it's not going down, especially to anyone who's shorted along the way in here, or if you're short now, of course, it feels like it. So it's, again, moving higher, but this is not a blow off top. It's not what we saw back in 2000. It's not even what we saw here in the beginning of 2018 with a near vertical run there. That one came after a prolonged uptrend. So that is more the closest thing we have here in the last couple years to a blow off top in the stock market, that little ramp there. But you can see this is not a blow off top. Those are just regular divergent highs with trend lines that broke down. So, all right, so you know my thoughts, and I'm not going to beat a dead horse, but just to reiterate on these levels here. So again, if something happened, and the point of this video is just have your ducks in a row. Whether you're long and you are concerned about being caught in another one of these and giving back a lot of profits in your 401k or your long-term funds, have your stops in place. And again, if you get down to these three color-coded lines, that would be where you really want to watch. Again, caution if you break that 263-ish level. Extreme caution if you break 258 or whatever, it's a 258.66. And the bottom falls out. I think if you break 250, that'd be a quick path down to the lows and then beyond. So first things first, we don't even have a sell signal on the broad market, so I don't want to get, sound overly dramatic here. They're just things that I want to lay out in advance, just in case that happens, because again, I've done this long enough to learn, or you can just study long-term charts yourself to learn this, that stocks tend to fall much faster than they rise, and the last thing you want to be doing is last thing you want to have happen to you is being caught off guard and then freeze up like a deer in the headlights. So have your trading plan, and same thing works in reverse. Maybe I'm completely reading the tea leaves wrong here, and we explode off to some 20% rally after we break out to new highs. And again, if so, it's just a rally I won't be chasing, and I certainly won't be shorting a 20%, being short on a 20% upside. All right, so let's move on and look at a few other things that really stand out. That's XLK. Again, same story as 2018. When tech breaks, the market breaks. Pretty clear to me. We'll see what happens. Maybe we get a whipsaw signal there and we go up. Anything's possible, but that is what I'm waiting for, and I will most likely fire off QQQ. A week ago or so, I shared some targets for those interested on QQQ. Let me find that board for you. There they are. Here's some price targets for anybody interested in a QQQ short trade in case things get moving here quickly. So this is what it looks like on this is a 120-minute chart. In other words, every candlestick's 2 hours, and you can see we're just dancing on that trend line, and we wedge higher. So really where it's at, I think if we are going to break down, it would need to be soon here within the next couple weeks, and it could come any day now. And with both We Alphabet on deck. Well, Alphabet already reporting today, down about 5% or so in after hours. And again, the big one too will be Apple. Apple's coming up here later this week. What is it? Did I say Wednesday or Thursday on Apple? Let me look at my cheat sheet here. Yeah, Wednesday after the market closes. So by then we'll have the majority of the big FANG stocks out of the way. And I think it's safe to say this market will have picked a direction if it's going to do so by then. So that's why I want to do this video and talk on these levels. And again, I'll keep this video here for members, because this may very well be, and I may even add this as just an official setup. The targets are the targets. The breakdowns are what they are. So whether you want to take those or not, if it's an official trade, that's up to you, or an unofficial trade. But that's where I think we'd likely be headed now in the next. And it could happen very quickly. Again, when the tide turns on this trend, it could break very quickly. It doesn't have to, but that would be a quick waterfall sell-off. And as I said before, there's a potential. I look at the charts, I see the potential to wipe out weeks and even months of gains in just a couple days, possibly. Depends on how everything plays out, how Apple goes after earnings and everything else. So let's just look at those charts. GOOGL today, Alphabet. It's trading as I talk right now. It is at 221.48 in after hours trading. It hit a high of 297 today. That's not reflected on this chart. And again, I always caution everyone, don't read too much into what happens in the after hour session, unless it's a huge move. Wait and see when the big boys step onto the field tomorrow, meaning the institutions. They can't really maneuver well. Some stocks, there's some liquidity in the after hour session, but it's not nearly as easy. So let's see what happens tomorrow. Long term, and this is a chart I posted today. There it is. We had a divergent high back here that led to that first drop. I don't know, it's 20-something% drop in about 22% drop in Alphabet back then. We pushed back up, and all we've done is back tested this bull market uptrend line from below. So if the after hour losses in Alphabet hold tomorrow, what you're going to see is a big red candle. And especially if they close the week, remember this is a weekly chart, so there's a potential to put in a big red candle here by Friday's close this week, and that would give us a rejection off a trend line. So it's one thing to get a back test. In the same way I always say, divergences or overbought conditions are not a sell signal. They could, and the reason is because they can be extended. Divergences can continue to build. Overbought can become more overbought or stay overbought. So just like that, a back test of a trend line isn't always, it's not necessarily a sell signal. It can be an objective area to short with a stop somewhat above, but the problem is when you back test, you can continue. We back tested right here on Alphabet. Here, I'll zoom in closer. We back tested that week. We had a little pullback. And again, I know we're a little bit above, but when you're looking at a weekly chart, you have to give a little bit of liberty to these candles. So for me, when I look at this, almost decade-long uptrend line here, for all intents and purposes, that is a back test. And again, depending on what happens tomorrow, we're probably looking at a big red candle, because as I said, we're at 220 right now, or 1220. I'm sorry, 1220. That puts us down here, really about the bottom, below that candlestick. Oh yeah, all the way here. So this is what it would look like right now in real time if I had after hours trade here, after hour trades on this chart. We'd be wiping out here. Let me pick another tool here. We'd be wiping out the last few weekly candles. That'd be a big bearish candle, and the fact that it comes on the back test even helps fuel the case. So, and again, take it all into context. This is a bull market trend line that broke. This isn't a minor uptrend line. It's not a 6, 12, or even 12-month or even 2-year daily uptrend line. This is a nearly decade-long, well-defined bull market uptrend line. Divergence is building for years. So there is the potential there that this was just the first leg down with more to come. Could look something like that. So just food for thought, and we'll see how it goes. I don't want to list price targets. I'm not crazy about the daily chart of Alphabet. That's why I only put up this weekly chart earlier today. Apple, this is a weekly chart on Apple. Same story. I have a different draw on the trend line. I could give you here. We can add it here. We can draw a longer term trend line there. off the lows. There's your primary trend line. Let me just tune that one down a little bit for now. So it's certainly one to watch. Pretty much you want to see if Apple were to take out the previous lows, that would be bearish. And even just to test those lows, let's just say I'm wrong and that in a way, but let's say that the most we're going to get is a test of the lows. You're talking a 30% drop in Apple just to go back and test those lows from back in December, just a few months back. That would be a pretty big drop. And again, if you do it now, let's turn this line back on. Here's what happens. This is the bigger picture. This is why you got to kind of factor everything in. So let's just say we get a test of those lows. What would it mean technically? Well, it will have then broken this long-term bull market uptrend line, goes off the 2009 lows. It would have taken that out. Last drop, that drop in December just brought us down to that trend line and brought us down to support here, price support as well. So this would have, a break of that trend line would have much longer term, much more powerful bearish implications to get down to that same level if we do it at this point in time, because trend lines are dynamic, meaning every day they come in at higher and higher prices, if it's an uptrend that is, because of the positive slope. So now a test of the same levels that we hit back in December would take us well below that level there. So there's Apple. PPO is still in bearish territory here. We had a cross down. I'm talking about the signal line, the 9 EMA. I pointed it out this morning. And again, you know, we were oversold, like almost every stock out there was back in December 24th. So we had a bounce, and so far, this is one of the market-leading stocks. It's still well off its highs. So there's Apple. And again, we have a couple days, so I don't expect any huge fireworks in the market until then, because Apple hasn't reported yet. But if Alphabet continues to sell off tomorrow, build on these aftermarket losses, it's going to take us down through those trend lines I just showed you earlier on QQQ and XLK. Here's what Apple looks like on the daily chart. Nice clean trend line. We had one little spike below. That's fine. Every now and then you see a little whipsaw signal, but so many reactions that I would still put this trend line give it a very solid, you know, check mark as far as how valid the trend line is, with just numerous reactions along the way since the lows on December 24th. And so Apple already broke down and back tested. But again, I wouldn't expect this stock to go very far in the next couple of days. Who wants to position long or short right before a company like this reports? But after it does, that could set the tone for where we're going, and I can tell you we'll have the majority of the big market leading FANG stocks already out of the way, having reported. So at that point, the market should pick its next direction. That would be my guess. So that's why I'm doing this video. This week might be go time. All right, next one up would be NQ. This is the NASDAQ 100 E-mini futures. This one is in real time right now, and you can see as I zoom in here, we're just limping along that uptrend line. It's the same uptrend line. It comes off the lows on December 24th. Same uptrend line I was showing you on QQQ, but you can see it here on the futures. And you know, whether we tick a little down below, what you want to see, the sell signal, again, you'll know it when you see it. It'll probably come and look something like this, a big red candle. And again, it has the potential to wipe out weeks, if not months of gains. So for you NQ traders, especially if Apple results aren't that good on Wednesday, you can see some near-term targets here, potential targets on NQ. And again, let's not get too far ahead of ourselves. Because we don't even have a sell signal yet. But if we get it, I will up my frequency of updates and analysis and all that, because you know we'll have to make a decision, you know, whether to book profits, you know, on some of these targets, or maybe hold out and instead of trying to hit a single or double, trying to go for the, you know, triple home run or even a grand slam. A grand slam, of course, would be a, you know, holding on a short trade that goes down below the lows on December 24th, and that's just a, you know, huge profit potential. If it were to happen on QQQ, you'd be talking, you know, well in excess of you know, excess of 25%. It's 25% just to get back down to where we were, 25% drop. So, and again, there could be a lot more than that. Okay, now just a few other things I'm watching. XLV, as I mentioned, in recent weeks, recent months, this was one of the most bearish sectors that I could see on the S&P 500. Also, one of the leading sectors as far as the weights. There's your bull market uptrend line off the 2009 lows. This was again pointed out a few weeks back before we had that big drop last week. Breakdown, hit support, back tested, and rolled over. So this is the common theme. These are important sectors. Tech hasn't broke. In fact, tech's driven this market up to where it is. But XLV, one of the largest sectors, broke its primary bull market uptrend line, back tested it, and look, just like Alphabet earlier, went a little bit above there, a little upside momentum, carried it through, and then it rolled over and started moving impulsively lower since. And again, the divergence and everything else said that this would probably be a major top here. So there's XLV, and I'm doing this now because I'll tell you, I think it's starting to look attractive for a short entry. Because we bounced back, or a short entry add-on. As I mentioned last week, we were oversold. There were a lot of healthcare stocks and biotechs, as I mentioned, at support. So I was favoring a bounce, and this is the area back here to that 88.60-ish level. You can see the resistance line there, and or this downtrend line. So really, we'll call it a bounce zone, right about here. So short anywhere in there. I think if we go much above this downtrend line, then I was wrong. Healthcare is probably going to new highs along with the market. But as of now, I expect a reversal anywhere from here up to that trend line. And to try to quantify it for you, that's a range of about it won't happen in one day, so come in about here, about 2.5%. So you call it a scale-in zone with a stop somewhat above, maybe a little bit above this level here. I can see a confluence of candlesticks there. So it's some resistance around 92.50 again. And then if that plays out, you set your stop, you let it run. Again, if you're going for the big picture here, the big gains, you're trying to hit a triple to a home run or a grand slam, that would be a playing this out for what it might be a major bull market top with a leg down, that'll ultimately take this one. You can see some of my targets, but I think ultimately come on down here to about this level here, about 65 or so. I wouldn't expect us to go straight there. There'll be plenty of zigs and zags along the way, but that's about another 27% downside. And again, that's just a rough target now. We'll see how things go. First things first, we need the broad market to break down. Next up, oil. Let's not forget oil. Oil had that big day on Friday. It's a weekly chart. Here's USO. USO broke down on Friday, very oversold in the very near term, the short-term indicators. So today was just simply a consolidation day. Let's not read too much into it. However, we're still well below the trend line. So that's USO. Same story on crude futures. Here's CL, and this is the move. Same trend line we were just looking at on USO, except we're looking at it on a 60-minute chart here with the crude futures, and that's the trend line off the lows. And the crude bottomed same day the stock market did, and has had the same rally, just of a larger magnitude, and that's usually the case. So there's your breakdown right here, the primary trend line, and it ended it with a wedge, divergence, all that kind of stuff, and we're still below the trend line right now. I should have touched on UNH. Again, I don't want to get into individual trade ideas because then the video goes forever, but this was one that has stood out to me for a while. And again, what happened is we hit support. We hit my target. Remember, I was highlighting this one from weeks ago, even months ago, waiting for a sell signal on a break of this long-term uptrend line. That's the bull market uptrend line, goes all the way back here to the 2008 lows. Very well defined, solid sell signal. So this is one you can second guess it all day long, but that is about as good as a long-term sell signal gets. A big red candle through that weekly trend line. We kiss support. You're not going to fall forever. The stock had already dropped over about 27, almost 30%. So it was certainly due for a bounce. And where else will a bounce come from? Most logically off support. And that's target that I had back then, 209.82, hit it to about the button, bounced, and we're coming up. We haven't yet made a full back test. We may or may not. Back tests aren't necessary. Doesn't mean that we'll get one. Doesn't mean that if we do back tests that we won't back test for a while or even come on through there. But as far as objectiveness goes, you might want to look for a back test of that trend line, and that may also align. Here's a minor downtrend line on the daily on UNH. So this looks a lot like XLV that I showed you a minute ago, and of course this is a big component of XLV. So there's your scale in zone. Now we're already above the 231.45 resistance, downtrend line. On this one, if you were to short it, maybe a scale in, wait for a hard sell signal on the market before getting too aggressively short with a lot of things. But there's quite a bit of resistance there around the 260 level. Again, if you're going for the big hit, you can certainly allow a stop of 5, 6, 7, even 10%. That's about a 10% stop or so if you get there. But again, you're looking at a trade profit potential that would be, my next target's down here, and that's about 44% below current levels. XBI likely to follow suit if the healthcare sector goes down. This is just really more of a subsector within the healthcare sector. And here's your chart, big weekly bearish rising wedge, negative divergence, just like you had, and it was pointed out, and it was a trade idea back here at the time. We went short the LAB. At the time I actually used LABU, the 3-time bullish. We shorted that one, so we took advantage of both the decay and the move down. And so again, it was outlined here in advance, bear market coming in the biotech. So that was a big bear market. And again, like I talked about, is bear markets and trends, usually it's not one and done. You have these waves, big counter trend rallies, and so far this looks like a wave up with another leg down to come. Indicators confirm, PPOs bounce back here. So that's just bigger picture stuff for the biotechs. Again, if you want, they're a little more volatile obviously than the healthcare stocks. And then the other one I wanted to cover was the REITs, IYR, this REIT ETF. There's a trend line here. Look, zoom in a little tighter. Multi-year trend line breakdown near back test there. I've been highlighting this one as bearish for a while. We had a divergent high here, just like you had a divergent high here and here. And simple stuff that sometimes takes a while to play out, but when they do, that's where the big moves come from. And this time around, we had this little wedge there. That was our initial leg down. We popped back up, overshot it by a hair, but we back tested this trend line. So there's two patterns. The bigger picture, we had this like this. This is a price channel, and again, steep divergence at the high. The trade idea I laid out a few weeks back was SRS, the 2-time leverage short ETF for the REITs, and it popped up, hit that first target, and as usual, pulled back, and looks like a reaction, and that's plenty of consolidation, plenty of a reaction off that first level. So this one may be primed for the next leg up. I need to revisit the individual components. I'd like to do that. And then I may consider adding this one on as an official trade, but I know some of you are already in it, and so that should open the door soon. A pretty nice green candle today. This will be the next target there, and of course you can see these are right now just my current targets, these three here. If something else starts to happen with the broad market, I may very well extend this, but right now, first things first, I haven't added this as an official trade, again, because this market is very unusual. Extremely resilient trend, which has made shorting stocks very difficult, but we're finally starting to see disconnect. As I said, certain sectors and individual stocks, those technicals are finally starting to play out for what they are, and so we're seeing disparity. Whereas a couple months ago, from January and February, the rally, almost everything was rising in tandem, and sell signals on just about anything just didn't pan out. So I think we're starting to see that shift. And there's, again, plenty of long. I'm talking about a lot of shorting ups here, but there have been and continue to be plenty of longs. The shipping stocks just continue to be on fire. Congrats. I know some of you in the trading room are trading those. Here's salt, one I highlighted with a divergent low. I don't know exactly where it was when I highlighted it. It's been a couple months now, so that one's up about 50%. And down the road, you can see, SB, safe bulkers just continues to rock, up another 15% today after the breakout of this trend line. NM, I've highlighted that one recently. SBLK, Star Bulk Carriers, another nice up, 7.5% today. It's punched through my 852 target now. So there's money to be made on the long and the short side. Keep that in mind. And finally, I'll wrap up. Just one that I mentioned this morning on the front page. Watching these generator makers due to an article I read in the Wall Street Journal about PG&E planning some pretty big blackouts going forward, and it has to do with the fact, although California did get a lot of rains this season, finally they had a decent rainy season, there's still just a ton of dry forest up all around in a lot of the areas. It's not just PG&E, by the way. There's other utilities also that have done and will continue to do, and I think they'll even follow in the wake of PG&E to do these preemptive blackouts, they call it. In other words, in the dry season, when the wind starts blowing, they're going to shut down the grid to a lot of areas, and they have millions of customers. So again, this wasn't mentioned in the article, but the first thing I thought of living in South Florida, because I've gone through several hurricanes, and I can't tell you what it's like to be without electricity for a couple periods, 10 days, 2 weeks on different occasions. All your food goes bad in the fridge. Medical devices, those things need to be run. So I would anticipate, in the coming year or so, probably a big surge in generator sales, and that's a pretty big market. So what I'm looking at here, I've gone through some of the names, but I'm looking for more of the. I don't think there's any one pure play company, at least not publicly traded. That's one of the problems. A lot of times I've been doing my research into the generator makers, and quite a few are parts either of a much bigger holding company, and if it is publicly traded, the generators make such a small percentage of their sales it won't even move the needle on the company's stock. Or in a lot of cases, some of these are privately held companies, meaning you can't trade the stocks. But Briggs and Stratton is one. The chart looks, actually the chart looks decent now. It has potential for a bottoming play. It's been beat down. It's not the best managed company, but again, they are up pretty sharply today. I don't know if it's for the same reasons that I bought it. And then I mentioned GNRC, I think it is. Yeah, Generac. They do the whole house generators, the kind that are installed there and will kick on automatically in your house. Whereas Briggs and Stratton, they're more the portable, smaller generators. This chart, can I make a screaming case to go long? No, but again, it's a fundamental play. And just an idea, if you're looking like I am, I've been struggling. I have a lot of cash, unusually large cash position in my long-term accounts, looking for attractive names, with a nice risk-reward profile. If anything, I could draw here this triangle-type pattern here, and definitely this downtrend line. I put a higher weighting on that, and this one broke out recently. So, if the stock market can hold up going forward this year, and even if it can't, see, this is what I like about these companies is they can march to their own drumbeat. They're not top holdings in QQQ or SPY. So therefore, even if you get a correction in the equity markets, these stocks could outperform because if they don't come under pressure from forced selling like you get with the big S&P 500, especially the top components there. All right, we're going to wrap it up here. And again, let's just see how the market trades tomorrow, follow in the wake of Alphabet's whatever they did tonight. Obviously, either what they reported or their forward guidance wasn't hot. Stock's down to about 1204 right now. And again, let's see what happens in the regular session. But as of now, it's not enough alone to knock the futures down that I showed you earlier. The NQ futures are still trading right on trendline support, right at the top of that wedge, but could certainly pop any day now. And like I said, with Apple on deck Wednesday night, I don't expect any huge fireworks tomorrow, but or Wednesday, but by Thursday, Friday, we could see some movement in the market. So just get your ducks in a row, and I may be adding some official trades on before then, at least trade setups. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.